Are you ready to keep learning what the market's doing? Well, let's go. We see that stocks are up for the day, bonds and gold are up also. Let's analyze what actually happened and what's going on. Going into our fourth week of decent up movement. Remember, on the S&P 500, we had a weekly vertical crossover. That's our most powerful signal for a confirmed uptrend or a downtrend if the market's going in the different direction. In this case, it was an uptrend. That happened last Friday. We've been looking in for a jumping in point for a practice trade. And of course, we found it this afternoon for those of you who were paying attention. I hope you were, because we encourage you to follow the markets with us, listen to what we're talking about and teaching, and then put it to use in practice trades. So we see a green up candle for the week. Price movement has pushed. The wick has moved above the prior weeks, which again means the sideways sliding is over. Things are moving up. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. We go from the weekly to the 2-day chart. Now, of course, we've just had the latest 2-day candle complete, and that's where we see the sideways slide being over. Derivative oscillator still losing upward momentum, but that most important price percent oscillator is heading up. We have a nice, healthy green up candle with a wick on top, no wick on the bottom. And as we move from the 2-day chart to the 4-hour, we were waiting for this. We were waiting for the crossover, which occurred in the morning, and our jumping in point was either late morning, early afternoon for a practice trade. And of course, we saw another green up candle heading up. 2 days of full, strong up movement. And we hope to continue to see this weekly vertical crossover play itself out in up movement for quite a while. We will keep our eye on the 4-hour chart and see what we see. Derivative oscillator gained upward momentum, crossing over. The derivative oscillator crossing over at the same time the price percent oscillator is. That's typically a good sign of something that will be sustained movement. Again, anything can happen. We talk about that all the time, but we try to put everything into play, the rules that we've set up, that we've seen work again and again and again, to have them work this time. Does that always happen? Of course not. If it did, everybody would be a billionaire and the market would not work. So what we do is we apply what we know and we continue to watch things unfold day by day. And that's what makes it exciting, my friends. That's where we are on the S&P 500. Let's go back to the weekly chart, head on to the Qs. The S&P 500, by the way, up 0.83%. The Q's up 1.5% for the day. Again, looks sort of similar to the S&P 500 going into the fourth week of up movement. Price, of course, that's a nice big wick on top, and we continue just to see stair steps as things move up. Derivative oscillator gaining upward momentum. We had that weekly vertical crossover at the end of last week, just like on the S&P 500. Price percent oscillator heading up. We go from the weekly to the 2-day. What do we see there? Well, we had a sideways slide after the market had previously topped on Friday the 18th. And of course, no jumping in point at the beginning of the week. We typically like to try to get in on a Monday around 10:30 if that push from the prior week with the weekly vertical crossover is still going on. It wasn't, but again, we can see the derivative oscillator losing momentum, but that price percent oscillator is heading up on the 2-day chart, green up candle. And we go to the 4-hour chart, 2 days of strong acceleration and up movement. We saw the derivative oscillator and the price percent oscillator both cross over in the morning with big up movement in the market and more movement in the afternoon. Again, price percent oscillator not heading up at the same strong angle it had been in the morning, a little tapering off, but that derivative oscillator continuing to oscillate strongly up. And of course, as one would expect the oscillation to do so, with all of that gaining energy in the marketplace. That's where we are on stocks. And again, hope you jumped into one of those two opportunities on a practice trade and that you are using your trade worksheet. I sure am using mine, filled it out as soon as I made my buy decision on my practice trade. And again, that trade worksheet, I'm looking at mine. It gives you the entry point, the time, and then the reason for the entry, and then your notes during the trade, including dates, candles, indicators, trend lines, etc. Then your exit price, reason for the exit, and then you note your profit or loss, the time in the trade, that's the number of hours or days, and then the lessons you learned from the trade. You can get that trade worksheet along with the daily market and the weekly market worksheet in your show notes. And if you haven't subscribed, do us a favor, subscribe to our podcast, subscribe to our YouTube channel, subscribe to us on Facebook, like us there rather, and help us out. Give us a comment. We love to hear from you. I'll do everything I can to answer your comments in the comments section. And of course, give us a thumbs up if you appreciate what we do for you free every single day. Okay, going to 20-year bonds from stocks. On the weekly chart, we have a green up candle forming for the week. It does have a little bitty tip on the bottom, a little wick, a bigger wick on top, a little bit bigger than the size of the candle. Derivative oscillator still losing upward momentum, but that ever powerful price percent oscillator is heading up. Again, up for the day, 0.86%. We go to the 2-day chart, and you can see we've now got 8 days of up movement. This latest 2-day candle, the strongest with a big wick on top. Derivative oscillator, however, is still negative, and the price percent oscillator hasn't crossed over yet, so don't have any trade at the moment. We'll continue to watch and see if and when that 2-day chart crosses over going up. 4-hour chart, big boom up in the morning and a bit of a sideways slide, a little more up movement in the afternoon. Price percent oscillator heading up, derivative oscillator gaining upward momentum. So we'll keep our eye on 20-year bonds and see what there is to learn. And now we go from bonds to gold. Gold up the least for the day, up 0.05%. And we saw about 0.5% up for the day. So not a lot of up movement, but gold has been up for the week. Derivative oscillators gaining just a little bit of momentum. Price percent oscillator heading up on that weekly chart. And we go from the weekly to the 2-day chart. And of course, that crossed over back on the Tuesday, the 29th. And here we have another green up candle for the last 2-day period. Derivative oscillator is not quite gone positive yet. Price percent oscillator is heading up. And we look at the 4-hour chart, and what do we see there? Of course, we see perhaps maybe at the end of the day giving us a little hope there might be a pullback and a potential jumping in point for gold, because we haven't had that pullback yet and haven't had a safe opportunity to jump in after the 2-day chart crossed over going up. We're waiting for the 4-hour chart to roll back over in the opposite direction and then cross back over going up like it did back in the morning on the 25th of January. It would look like that when it rolls back over, and that would give us, or rolls back up is what I should say, that would give us the opportunity to potentially jump in. Because again, we want to find safe jumping in points. You don't want to buy something at the top. That always poses a problem. Okay, folks, that's where we are on all of these charts. We appreciate you being with us today. For those of you who are our Patreon supporters, I'm still gathering your emails and your requests. I'm being asked to look at XME, SOXX. I'm being asked to look at OIL. The rest of you who are the Patreon members that are getting ready to receive that special broadcast, would you be so kind as to, again, email me, or you can put in the show notes. cw@chartingwealth.com is our email address. We'd love to hear from you. Those of you who want the special training that we do, we review the stocks you're asking about, and again, look at them from a practice trading standpoint, not giving market advice. We don't do that, but we're happy to look those over and help you maybe learn better how to start practice trading those stocks or other ETFs. You can, of course, write us. If you're not a Patreon member, let's follow the link there in the show notes to the Patreon page and become a supporter. If you don't have our book, Charting Your Way to Wealth, that's the first thing you do. And depending on your Patreon level, you can get a book for free. Folks, that's where we are at the end of the day. We so appreciate you being with us. We love to hear from you. Again, do subscribe, do put comments, do give us a thumbs up, and cw@chartingwealth.com is the email address. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.